if you look at what drove our 17% revenue growth and 44% operating profit growth, it really came out of our caterpillar business in Southern Africa and Russia, and mainly out of mining demand in those territories. So that's where we're getting real traction. If you look at our European businesses, while there has been some recovery in, say, UK, Belgium and Holland, Spain still remains pretty challenged.
The recovery certainly is linked to the mining demand and the demand for commodities that we're seeing, and record commodity prices. There is a risk there, though, that we're seeing inflated commodity prices. How do you react to those detractors that say that the commodity story is not going to last?
Yes, well look, we saw it in the run-up to 2008. We had a big commodity boom, we benefited, and then we had two tough years over 09 and 010. It's come back very strongly for us now. I guess the commodity theme is somewhat linked to the China growth story, and if that continues at high single-digit levels, I think the underlying demand for commodities will be robust. I also think a point is that currently commodity prices are still well above threshold levels for future mining investment, and so I think there still is a bit of headroom for commodity prices to come off before you would see substantial impact on future mining demand.
You mentioned buoyant mining demand in Southern Africa, but Angola is still under pressure. What trouble are you experiencing in that territory? Have you taken the necessary remedial action?
Yes, Angola for us is 80% an infrastructure territory as opposed to a mining territory, and infrastructure demand came off quite strongly there. But I think with the oil price still at highs, Angola is making a lot of dollar export revenues. It gives it the ability to put money back into infrastructure programs. It's been a slow time coming, but I think over the last few months we've seen the position stabilize, and we've seen order books start to rebuild slowly. So we're still a far way off where we were, say, 2 years ago, but I think the medium-term outlook looking more positive there.
Over the years we've spoken extensively about the pain that you are experiencing in Iberia, still reporting an operating loss, 70 million rand. I see the restructuring charge of 56 million rand. You have now stated that you've right-sized that business for demand going forward and that you expect a better second half. Are we going to return to profitability in that territory?
Yes, I'm pretty confident of that. You know, as you say, if you extract the once-off restructure cost there, it was a small trading loss of about 14 million rand, and I'm quite confident with the lower cost base we'll return to profitability in the back 6 months.
Despite the austerity measures that Spain is obviously in the midst of.
Yes, you know, I think our outlook for the industry sales for this year is at best flat, if anything marginally down. But we believe even on that sort of negative outlook for the industry, we believe we can still make profits given our lower cost base.
Russia, certainly from an equipment perspective, you are seeing good traction in that territory. Are you expecting it to continue?
Very much so. You know, operating profits there were coming off a low base, but with some 260% up. So it performed ahead of our expectation. You know, we acquired the remaining 50% of that business for $52 million 1 October last year. The timing has turned out to be very good in terms of the mining recovery cycle there. And our order books still remain at high levels. So I'm pretty confident about the back 6 months and into the future in Russia.
Very competitive space in the car rental environment. Do you see that as a viable business going forward?
Yes, I do. I mean, we obviously had last year, we had some sort of abnormal profits on used vehicle rollouts. We also had the benefit of the World Cup in the second 6 months, which underpinned demand. But I think it is a highly competitive environment. Car rental rates are under a lot of pressure. But I think you know, we've got to look internally now towards focusing on costs, people, productivity, in order to get the returns back to where they should be.
Can you take more costs out of the car rental business?
Yes, I think we can. You know, I think we can take further cost out. We're looking at rationalising certain aspects in terms of our used vehicle retail outlets, and I think that will stand us in good stead.
The strategy to combine the automotive business and the logistics business, that came into being on the 1st of May 2011. You obviously wanting to derive synergies between the two different elements of the business. How quickly do you think that you can gain traction there?
I think it's going to be reasonably quick on cost efficiencies, because we can start to execute that over the coming months. I think we also, however, see synergies between our commercial fleet services operation and our dedicated transport business within logistics, where one owns the fleets, the other is focused on the transport management solution. That will take a little bit longer as we win new business, provide a broader offering to our customer base. But I think some will be booked short term, others maybe in the medium term.
The demand that you're seeing in the equipment business, if we can just retrace to that area of the business, one of the challenges that you have stated is a supply of equipment to meet that demand.
Yes.
What is your contingency plan on that front? Are you investing heavily in new equipment?
Look, it was a major issue for us at the height of the cycle in 2008, where lead times on big mining trucks had gone out to around 2 years. As the crisis hit, that dropped within a very quick period of time, from 3 to 4 months, as quickly as we could get equipment out of this United States, put into a boat and shipped here. We're seeing lead times going out to 18 months to 2 years again. And you're absolutely right, that is providing some constraints in terms of our supply chain getting sufficient equipment to us on time. But we're working very closely with all the major mining houses. We're working with them on their mine expansion plans when they require equipment, and we're putting orders in on Caterpillar some 18 months to 2 years ahead of when they're actually going to be required on the mine sites here in Southern Africa.